Okay, all right, then let's start the event. And then the topic of today is how to launch your startup successfully through a launchpad. Why launchpad? Because Simon has started a very interesting project called Eclipse Fi, and they are also a launchpad. And besides that, they also successfully launched a token and successfully built a very engaging community. And starting from 2016, he has been very active in the crypto space and as an investor as well. So I will give the floor to Simon. He can make an introduction for himself, and then you guys know a little bit more about his background, and later on you can ask questions that are related to your projects. All right?
Yeah, how's it going, guys? Simon from Australia, living in Bali, and I'm very excited to be jumping on this event with Yasi, who invited me, and very excited to be able to share maybe some value that might be helpful for you guys in terms of like building your startups, launching your startups, and go to markets, which is one of the big challenges of cryptos is how or blockchain is how do you actually launch your token successfully. So I'm Simon. I've been in the space since 2016. I haven't been building in the space necessarily since 2016, but I was around ICO days. I was involved, as an investor and as a trader through 2018, 17. And then coming into the bull market was early DeFi summer. Ended up getting very involved with the Terra ecosystem, which was a bit of a disaster in the end. But I worked closely with a fair few projects there, advised some projects, and also ended up building. The TFL funded the education for the entire Terra ecosystem, which I actually helped to build and worked with a lot of different projects such as Astroport, Mars, and various other startups in terms of like creating kind of like an earn-to-learn and engaging quest platform in the earlier days. Post that, actually, the Terra collapsed, and that was quite disastrous. I ended up putting my focus more on the Cosmos ecosystem and starting to build Eclipse Fi, which is, currently the protocol that I am the founder of. Through that time in the bear market, it was obviously a very different situation in terms of building communities, bootstrapping tokens. It was quite challenging for protocols raising, but also challenging for those that were brave enough to try and launch in the bear market. It was very brutal, but it was very much like a time we spent a lot of time with quality builders. We actually built up like heavily our own network across, centralized exchanges, KOLs, VCs, angels, chains, projects, and everything. So spent a lot of that time in BD initiatives and really doing that. Also helped to support and advise a fair few good Cosmos projects, including Nibiru and Nolus, not Bonus Block, and many other projects in the space. Then fast forward, come to up to now. In December, Eclipse, we actually launched our own token, and there was a build up to that. We ended up doing about $1.5 million fundraise just in public across multiple launchpads. We actually then the token launched successfully. And since we've been able to support projects from early stages of fundraising through to like onboarding key opinion leaders, landing centralized exchanges such as Bybit, and then launching. So there's quite a lot of noise in the space. There's quite a lot of different things that you have to factor in. But we'll cover off, like, I guess, the pros and cons of launchpads, go to markets with tokens, and different ways of doing it in this call. And I'm sure Yasi will ask some good questions. So it gives you a bit of background.
Yeah, thank you so much. I will start with some very simple questions just to give the audience a little bit background about some basic information. And if you have other questions, feel free to raise your hand. There's a reaction button at the bottom in Zoom. And then, or if you prefer, you can also type your questions in the chat. Okay, so let me start with the very first basic question is, what exactly is a launchpad and how does it work for startups?
Yeah, perfect. So I'm going to answer this two ways. I'm going to answer what a launchpad should be ideally and what a launchpad is in the space, because these launchpads comes in a variety of different forms, and some of it's better than others, and some of it's suited to different projects differently. So a launchpad, you could call it an IDO launchpad, but there's different variations. So Fjord Foundry, for example, an LBP platform, you could classify as a launchpad. Same thing with CoinList. CoinList is more of an ICO launchpad and more centralized player. Sorry, and then other IDO. Then you got IDO launchpads such as DAOmaker and Cedarfi and Ape Terminal and Eclipse Fi and various different forms of launchpads. the ideal behind a Launchpad is actually more of a marketing tool than just a fundraising tool. And it's why there's different categories of Launchpads. Some of them act more as fundraising tools, like a Fjord Foundry or a CoinList is both a marketing and a larger scale fundraising tool. IDO platforms typically do smaller ticket sizes, so they act less on the, I would say, the fundraising side. Like if you look to raise many millions of dollars, it's less kind of the ideal route, at least at this current stage, and more so as a marketing tool. They act as kind of really a way of distributing and launching your token, and a way of actually getting, I guess, community and hype and noise and stuff behind your token. The reality of the industry at this current state, with many, I guess, like IDO launchpads especially, is they often act as kind of like hype marketing tools. So they're not always great value adds over the long term, at least in the current state. So depending on the type of project that you're building, it can be a difficult route to go down, because sometimes you have to then weigh off, okay, do we go through a launchpad and we're going to get a lot of noise, we're going to get a lot of hype, but is that going to lead to long-term value, right? And you're going to get a lot of noise. And this might be an avenue for a lot of projects to get listed on specific centralized exchanges, to really kick off their project and really bootstrap that community with KOLs and all this sort of stuff. But then it's up to the founders to also determine whether that hype value is you're able to then translate that into longer term value, or is that going to add enough benefit? So we'll touch on that through this call and the pros and cons of all of this, but really looking at like Launchpads can be a good tool for marketing and hype, especially around your token launch and TGE. But as a founder, you have to weigh up the different types of launches and the different types of platforms to weigh up whether you can translate that into like the long-term value that you need. So yeah. Oh, you're muted still, Yasi.
Oh, sorry. Okay, then let's touch on the second subject you mentioned. Like, what are the pros and cons joining a Launchpad?
Yeah, I can touch on that. So, and so come back to my last question. I didn't really tell what a Launchpad was, but Launchpad is, let's say an IDO Launchpad is a tool that facilitates token sales to communities. So typically, the Launchpad sells, let's say it's an IDO Launchpad and you're wanting to launch your token. You need to, you need to, obviously you need to set a price, either through price discovery or through, the market determining that, or yourself. You need to seed the pools or be listed on sexes, and you need to launch your TGE or as your token. So that's not always as simple as just creating a pool and setting. Oftentimes, because bots may come in to snipe it, or you might have investors that might sell into the pool. But it's not, always the best way to do it. So Launchpads is like a token sales, like you'll sell tokens and distribute tokens out to a community, and that'll be done through a token sale, which will also raise capital, which will help you to seed the liquidity pool. Pros and cons of Launchpads. Again, there's different forms and different types of tools for Launchpads, like from an LBP to an IDO to a ICO to different tools. Some of them will be accessible, like a CoinList, may be very hard to access unless you're a very premium top tier project. Other IDOs, I would say one of the biggest cons, I think, of the Launchpad space in general, if we took the term Launchpad and we DAO Maker, Seedify, Ape Terminal, all this sort of stuff, is that their focuses and intentions are maybe differently aligned to what yours are as a founder. And what I say by this is that their job and their intentions is to make your token price go up. That's the kind of relationship that they have with their communities, is about, like, successful IDOs is about having the token launch go well. And that doesn't always align with what's best for the project long term, in terms of sometimes, if you don't have a lot of leverage yourself with having an existing strong community or strong tier one backers, all this sort of stuff, it can sometimes put you in a position where the terms are maybe unfavorable to you. So many Launchpads have introduced things like refund policies, or they'll try and edit your tokenomics, or they'll do a whole range, increase their fees, or do sorts of things so that it falls in their terminology, depending on how much leverage you have. So you have to it's a bit of sometimes a minefield to navigate, depending on the niche that your project is in, the amount of traction or hype that you already have behind you. Even though the Launchpad is meant to help you build community and hype, a lot of them are wanting projects that already have some legs behind them, so that they can, obviously have high chances of success. Some of them will push into like incubators, or they'll, support from earlier stage at building up that traction so that you can build up your community before you come to the Launchpad. But oftentimes they'll be looking for a project being in a very specific niche to do that. It might not be favorable as well in terms of valuations. So you might have an idea of what your valuation or your project's worth. And it may be even reasonable, but a launchpad may look at it differently. So if you want to get on some launchpads, they might actually want you to reduce your valuation for launch because they want to, they want more like returns for their audiences and communities. Cons as well is you have to also navigate whether the communities that are onboarded on launchpads are the people that you want in your project. You are going to get noise. You're going to get KOLs. You're going to get people that are going to stick around and use your product. But there's also going to be a lot of mercenary users that might be there for the wrong reasons. So when you're doing this and you're building sort of stuff, you have to weigh up, like, how do I translate these into real users? Is this specific venue going to bring in users that I need long-term? Or is it going to just bring the hype that I need to step to the next level to then build that in? On the pro side, things that can come that are positive from a launchpad, from, I guess, and I'm generalizing when I say launchpad in general, they come in different shapes and sizes, is that they can help you raise some capital on a launchpad. So that this might be to help build your project further, or it might be to it may be to actually seed your pool. Although I wouldn't recommend, unless it's a bigger IEO, an LBP or CoinList, to rely on a launchpad for your main funding, because there may be other costs associated that may actually not be as much as you think there is. Like if you're paying for centralized exchanges, which some of them might require, it's going to cost you a lot of money. You're going to have to give money to the market makers to seed the pools. So sometimes that money can be used towards marketing or seeding the pool, or, some of it can be used towards building. So fundraising, and the thing that it will help is exposure, marketing, and hype. So you might come from a project that's not known by anyone to building up to getting KOLs investing in your round. In KOLs is influencers, right? To getting PR, to getting kind of noise built up around your project. Where you might have something really cool, and then everybody suddenly hears about it because you're going to be on this launchpad. So it can definitely help with the marketing effect, at least that initial surge. But that can also be short-lived. So it's your responsibility to really take that and use that to kind of springboard you to the next level. The third thing that can be really good for it is the hype and marketing and the noise can actually get you in good position to fundraise before the IDO. It could also get you in a good position to get listed on centralized exchanges that might be really hard for you to get listed on if you didn't have that. So, for example, we did Bonus Block, which was one of our recent launches, and we went a bit more hands-on with them and really supported them. They had a lot of high-level partnerships. They had over 1 million users across the different platforms that they had, but they were still struggling to fundraise. As soon as we announced the idea with them and started working with them, we managed to raise direct introductions over 800K, and then close out their round, 300K round IDO. They end up on Ape Terminal, and then they end up on Bybit. So that was a really powerful result, which isn't guaranteed. And that was actually quite a lift from our side. So it was quite difficult, but it can show you how sometimes it can catalyst, and not all the time, but can help catalyze some of the other elements as well if you're kind of stuck in a spot. But then your job is to actually turn that into reality. Is now Bonus Block's job is they've launched, they've had the hype, it's kind of cooled off. Now their job is actually to take those funds and raise and everything and actually deliver on the product that's promised through that launch. Centralized exchanges are very tricky, right? They're very hard, good ones to get onto. A Bybit is very, very hard to get onto. A KuCoin is, it's not as hard as Binance, but they're still difficult to get onto. They cost a lot of fees. So the higher leverage you have, the better. Even secondary, gate and things like that can end up like asking you for pretty high fees unless you have the leverage and the noise behind you. So the Launchpad can also catalyze that hype and marketing noise, can actually help lead you and spearhead you into where you need to go, which gives you the springboard. What I would say is, in an ideal world, the Launchpad should be there to help you build community. And this is kind of what we want to do over the long term, or what I think the Launchpad space should really move towards, which is not just creating more marketing and hype, but how do you actually drive quality users into your protocol and gain that exposure and then funnel that in. Currently, founders have to figure out how to do this themselves, which is like how to convert that into real users and activate them. But I think I think in an ideal world, the Launchpad should be helping to bring users in and become long-term quality users, as opposed to just kind of mercenaries. So I know that was a ramble, but I mean, I guess maybe that gives you a bit of a picture. I've generalized Launchpads as a basket, as opposed to like different subset categories. But there's pros and cons to using them, and you have to weigh up where you're at, what your goals are, and there's different ways as well to distribute your token or to kind of get price discovery.
Can you give us a general overview what types of Launchpads there are? Oh, you mentioned about different like maybe segments of Launchpad? Just give the audience a general overview to understand that background.
Yeah, definitely. Different Launchpad segments. So you'll have ICOs, such as CoinList, which are premium venues that are quite hard to get onto. They've been around for quite some time. CoinList I would say CoinList has too many competitors besides maybe Binance Launch Pool, which is the way that Binance launches their project, that one's very hard to get into, typically Binance-backed projects. The CoinList is typically launching chains, raising a lot larger quantities of capital, like 10 mil plus sometimes. So they're able to really move a lot of money, typically much higher valuations. And they'll be usually chains or very large infra projects that they'll launch. Hard to get into, but it can be good for catalyzing. Then you go, I would say a level below, then you've got IEOs. IEOs can bring a lot of money and exposure and noise, but they can also be quite predatory. So IEOs are initial exchange offerings. Gate and some of these others, they're all structured very differently in how they operate them. Some of them, they actually don't raise you a lot of capital. Some do. Oftentimes they're predatory in terms of the terms because they ask for all the tokens to be unlocked directly at launch, or they're asking, they'll put in contracts to have a price performance requirements, or all this sort of stuff, which I'm really not a large fan of from a legal perspective and other reasons. So you got to navigate. IEOs aren't as popular these days. I haven't seen many IEOs really done that much recently. Then a step below, you have maybe DeFi launchpads or more alternative launch mechanisms, such as liquidity bootstrapping pools. Fjord is kind of very famous for this. It was initially Balancer that kind of brought these in. They're quite a complex model, so they're not super retail friendly, but it's essentially it's an algorithmic falling curve where the price falls over time and people can then buy in as the price falls, and then it sets price discovery. The issue with LVPs that we're finding, especially recently, is they're pretty open, so people can kind of really buy in during this time, and it can absorb a large amount of liquidity. So all the buyers that want to get in during the LVP, and when the LVP is over, it's sucked up all the buyers that want to buy, and so there's no more kind of interest or buy pressure left, and so you often see LVPs being much higher valuation, raising a large amount of money with a hype, and then they end up falling off a cliff after launch, which we see happen quite a lot actually for a lot of LVPs. But people get hyped, they get excited, they jump in. It's all exciting about price discovery, and then afterwards the token falls off a cliff, which is less fortunate. That's liquidity bootstrapping pools. They are a lot more complex for retail to understand. Very DeFi native. Then you've got IDOs, and there's obviously different, I guess, subsets of IDOs, from permission platforms to permissionless. So Pink Sale, Gempad, a few of these are permissionless, where you can actually go and you can basically do your own launch, right? You don't need anyone telling you what to do. If you've got a community, you can go, hey, we're going to do the launch. We're going to distribute it to our community. We're going to do it through this platform, and no one's gatekeeping this. Like you're not really doing much, but you run your own sale through a third-party platform, like a tool. And then you get like regular IDOs, which are more curated. They come in like different, I guess, tiers or categories in terms of like the amount of leverage they have, the introductions they can get you into, the sexes that they know. So, Ape Terminal, DAO Maker, Seedify, Paid Network, and then below it you might have Communitas, BSC, Engine Starter, GameFi. There's different like categories of this. The pads that you pick will make a really large impact on the hype that you will get. So if you try and go across too many launch pads, or you're going on lower tier launch pads in a market that isn't super hyper bullish, it will have an impact on the hype that you have, or the perception of the optics. So there's that to also weigh up, which is challenging. But yeah, that gives you a category, I guess, an overview, if that answers the question fully. There's other alternative mechanisms. We're playing with a couple at the moment. Like launch pools is something I really like. Launch pools is essentially a mechanism where someone could like deposit their ETH and use the yield to pay for an IDO. So there's other different tools and things popping up that are different ways of bootstrapping liquidity. There's other DeFi dexes sometimes have their own launchpad mechanisms, like overflow farming and others, but for the most part, they're not as common.
Right. Okay. Thanks. It's a pretty comprehensive overview. And then coming back to the startups and entrepreneurs, at what stage do you think is suitable for them to join or apply for Launchpad? I think you're muted, Simon.
I am muted.
Okay.
Can you... So there's a couple ways you can look at this. It depends on if the Launchpad is an incubator program, for example, that might be something that you can go to an early stage, like an accelerator. Typically, Launchpad accelerators are not as or incubators are not as good as you're going to expect from, some maybe third-party ones, but they may be plugged into Launchpads themselves. So you might go for an accelerator, and they might plug you into Launchpads after the court's done. But sometimes they also know how to get a launch successful, but the support value versus support's not going to be there. But it does depend on what type of project you have. Like Impossible Finance, if you're doing node sales or you're in infrastructure, they've been incubating a fair few node sales, and that's been quite successful. Node sales is actually a meta that's popped up recently for infrastructure that have nodes, which is a large amount of node sales. So that's another, I guess, Launchpad thing. Typically, Launchpads, you start talking to Launchpads pretty close to your token launch. So typically you want a product live with traction, or at least a product in the right narrative that's going to be live pretty soon. You want to have some level of traction or community. If you try and approach a Launchpad with very little traction or community, you're going to run into issues where they're probably going to turn you down or give you bad terms. You could start talking to them, but oftentimes, the same as a centralized exchange, they might go, no, sorry. If your project's in the right narrative or the right kind of section, they may offer incubation, or they might support the early stages to help build up. But it's a very challenging chicken and egg situation, because you want the Launchpad to build up the marketing and narrative and hype, but then they want to see community interaction to build it up. So you get in a bit of a funny situation where you do need to have your own kind of community, or at least be a product in the right category before they'll start taking you seriously. Which I think is a challenge a lot of projects face, is how do I build up my community and build up my traction before I go into launches? But it's also the same thing with fundraising, right? With a VC round, like in these current markets, they want to see adoption on your products, but you need to raise funds to actually get that adoption, right? So there is a bit of grindiness involved in this process. But I would say maybe a month or a couple months out from launch, when you're expecting to launch and you want to launch your token, that's when you should really start to engage with Launchpads and get into them. Yeah.
And you mentioned about some Launchpad will look at how, if you already have existing community. I wonder how big the size of the community should be to give you you're on good ground to apply for different Launchpad.
I'd say the bigger the better. Like it depends on it also depends on your product, it depends on your traction. Things will kind of counterbalance. Like if you're a product that's in the right sectors, like that's currently in the meta, for example, that pressure will be taken off a little bit. Like if you're an AI or IWAs, you're building something pretty innovative, you've got some partnerships, you're in a good place. Like they may go, you're in the right category, we'll help you build and bootstrap that community. They might be more kind of inclined. If you're in kind of deep DeFi, it's not really adopted, not really being touched, maybe it's a money market, you haven't launched your product, you've got no traction, no community, they may just go, not yet, come back later, right? And that might not be the stage for you to be launching a token anyway, right? What they're looking for is not just community size, but they'll be looking for engagement of that community on socials, on Discord, Telegram. They look at your posts and there's 0 retweets and it's completely dead. They may go, okay, you need to do some work on building up that community traction first. Same thing with Twitter. If you've got 500 people on your Twitter, then they want to see you've been putting some work into your socials first to be like engaging, building the community attraction before coming to a pad, because that's typically what will flag you. To be fair, like a lot of these launch pads aren't doing good due diligence. It's something that is frustrating, and it frustrates me a lot. But like they won't even have a due diligence person. They will just look at someone's socials and they'll look at the narrative and meta and be like, this can be successful or not. And it's actually bad about our industry for sure. But the reality is they're looking for kind of the noise, because it takes the risk off their shoulders, right? Yeah. But it depends again on the category of Launchpad that you're interacting with. If you've got good backers, that will help. Anything that you have that is leverage will also help with this. But they often want to see that you've put in work in terms of marketing, community building before you get to the Launchpads, before the token launch. And this is the case anyway. Like if you're launching a token, you want to know that you've got a community behind it to distribute it to. Otherwise, unless you're doing a very stealth launch and you're launching it yourself and doing an airdrop to a bunch of users at a very low valuation, and you're looking to build the community token that way. If you're looking to get that marketing a hype, exchanges want volume. Launchpads want price action and buyer pressure and community. So it's just part of it.
Right. And in general, what do you think either Launchpad or VCs or investors are looking at when they are doing proper due diligence of a project, so that the project know that what kind of items on the checklist they need to do well?
I mean, to be fair, a lot of these pads aren't doing due diligence. I'll be completely honest.
Yeah.
Like it's something told us, like we do very heavy due diligence, which is a good thing because what we're trying to build long term, but it's also slowed us down heavily because these projects coming to us going, oh, these pads aren't doing due diligence. And I'm like, yeah, but that's not going to stage what we do. So they're doing limited due diligence. The interesting thing about DD, and again, I think it's a issue in our industry heavily, is that hype supersedes DD. So what happens, right? Like when you're raising a fundraising round, and this depends on the category of VCs you're going after. Like if you're going after, you're doing a bigger round, you're an infra project, and or a bigger project, and you're going after tier one VCs, they're going to have very heavy due diligence. But if you've got like a Hash, you've got an A16Z, you've got a coin fund, right? They're going to do heavy DD. But then this tier two, tier three, tier fours of VCs that would typically like do DD when you're one of the, they're the first in the round, or you're lower hype, or they're investing at an earlier stage. But if you get to launch and there's hype and their friends are jumping in, that DD will go completely out the window. We've seen this happen time and time again, where the FOMO and the hype will supersede it. So in that sense, with Launchpads, the number one thing that helps in terms of you want to get into these Launchpads, you want to get into these exchanges, is your product within the narrative, right? Is it within the current kind of meta in the space of what people are talking about, what people are interested in? Community, is the community talking about, do you have partnerships? Like, what is your kind of traction like? Do you have TVL? Do you have volume do you have volume if you've got a perps or you've got a DEX? Do you have volume? Do you have liquidity? Do you have all this sort of stuff? So looking at like the different traction metrics for essentially the Launchpad is looking to go, can we get people excited about this, right? Is this going to be something that people are going to be excited about because that's what they care about? So as much as we love or hate it, that's part of, obviously that section of the industry. And the same thing with investors, right? Investors, like quality tier ones and VCs, if your product is differentiated and strong enough and they can see kind of the fit and the financial model and the team and everything behind it, it's going to be easier to get them at earlier stages. But then, also sometimes that hype really helps with the fundraising round as well. So yeah, it's challenging for sure, but it's the current, at least where the industry is currently at in terms of the cycles. Oh, you're muted, Yasi.
Oh, sorry. When you guys are doing due diligence, okay, what are metrics you are looking at?
So we're looking at we go like a fair bit deeper. So we're typically like we had 3 stages and we've cut them back more to 2 in terms of like DD stages. We're looking at a few things. We're looking at like the team, like their experience, like whether it's Web 2, Web 3, have they successfully built products before? Do they come from backgrounds or projects that are that are solid from that front? We aren't looking for anonymous founders. That's something that we're like, obviously we push back against. So we want like people that are either publicly doxed or at least doxed behind the scenes, that we can kind of in the case of rug pools, we've seen projects rug even with doxed founders, so that's a risk. We are looking at backers, like investors behind the projects. It is also sometimes a situation where we believe in all the other elements enough that we may take the project and support with the fundraising rounds at the earliest stage, but that is more risk. It is also more risk and it's more difficult. It's quite a lot of work and a lot of lift, but it will depend on the project. We will look at community, and it's a similar thing as the last point. Like if the product is and the project is solid, there's definitely ways you can support these founders in terms of like, we know that these are the levers that you need to pull to kind of help to kickstart that community building efforts. We're very much looking at product market fit and the product you're building. Like, are you going to be able to build a sustainable fit financial model or sustainable revenue model or sustainable token model from the product you're building? Is the product you're building going to be competitive within your space? Like if you're building the number 76 perps on the same chain as everybody else, like how are you going to actually create a long-term moat and compete with everybody else in the space? Right? It's kind of a fair question. You may have unfair advantages, like you might come and say, hey, we've got $10 million of committed liquidity, or the team's from this background, or you might have a new model that's completely proprietary. But we're looking for differentiators, we're looking for moats, we're looking for kind of exciting new things in industries and reasons. We do somewhat look at like the narrative, but we're not so narrative driven ourselves, because we like to look at like we want sustainable projects and protocols. But it also needs to kind of have everything else fall in line, so that, you know, it's not like, hey, here's like the most boring thing, the most unexciting thing in the world, and here's a token, and there's no community or no backers or anything. And then the community, it's like very hard to get them excited about that, or to actually get people to kind of invest. Same thing with investors. So yeah, I mean, we've got quite the process. We do look at things like audits and all this sort of stuff, but that's sort of more closer to launch. Yeah, I'm just trying to think whether I've missed anything there, but yeah, typically like we're looking quite deeply at the product as well. And the tokenomics. Actually, tokenomics is really important. You know, we're looking for community focused distributions. I don't like when a project comes across the deck and they have, you know, 70% for insiders. It's not something I'm a very huge fan of. Same thing with yeah, it is going to be things like unlocks, investing schedules, and distribution valuations are things that we also do look at quite a lot.
How about the size of the community or users?
I mean, that's important, but again, as I mentioned before, it's depending on other factors, right? Like if you're coming to me with a deck and you go really strong founders, really strong backers, maybe there's traction on the product, or is it fit in the narrative, it's X, then I might turn around and go, okay, cool, you need to build some community here, but it's not going to be too hard to do. Like these are the levers that we need to kind of pull to help build the community. And some products have community, but it's not really activated or strong, but that's not a huge lift. If all the other things line up, that stuff can happen pretty quickly. Like you can onboard, you can do a KOL round and then start to really kind of drive that initiatives, campaigns, all this sort of stuff. You can kick that off a lot quicker. I'd say the bigger the better. Like if you've got a strong community already, that is a plus, because it helps to obviously move things along. Like if you've got a strong engaged community, we know that we're going to be able to build this, and these guys are going to support the launch, and they're going to be kind of active. The other thing as well is traction. Like I'm very big, like if you've got a DeFi product, depending on the kind of product that you're looking at, I like to see the product in the market before you go for a token launch. Depending, I guess it really depends on the type of product that you're after. But if you're building like a DEX and you're like, hey, we haven't launched yet, and we're doing this and this and this, and your DEX isn't launched, you've got no TVL, you've got no volume, you've got no traction, it's like, unless you really need the token for that launch, it's kind of difficult to look at. Like chains and stuff often need that token for the launch, because, you know, it might be the gas token or whatever for the network, but they might already have 50 projects committed. They might already have 20 partnerships or 30 partnerships. So the traction behind it is also very important, of like, what have you achieved until now, until the token launch, that is going to help to like, just not ensure success, but really help to like, help to create to showcase like these guys are a winning team. They're going to be a long term. So you got to think of it in the investor's perspective or the sector's perspective. They're like, is this going to be a project that's going to be successful? And sometimes their timeframes might be a bit skewed. Like we're kind of looking for more long-term success. Some might be looking for like short-term kind of hype and success, but they're going to see like what are the risks and the catalysts of this not being a success. So the more partnerships, the better. The bigger the community, the better. The more active and engaged they are, it's obviously going to help a lot for sure. If you've got 5 people in a Telegram group, might not be like constitutive of what they call a community. They're looking kind of for numbers. But if you have like a couple hundred people and they're super active and vocal and participate in everything, I see that as, to be honest, stronger sometimes than having 2,000 people, right? Like, or 10,000 people. But they're going to want to see the noise, because the sexes want to see, are you going to bring me new users? Are you going to bring volume? Are you going to bring me liquidity? And that's kind of what they want to figure out.
Would the criteria differ for protocol-based project or like a user-based project?
It does, because protocol-based projects, you're not just looking at community, you're looking at adoption of the protocol, in terms of like, if it's a money market, you're looking at how much TVL the protocol has, or you're looking at how much you know, usage there is. Like if it's a DEX, is there volume, is there liquidity? A user-based protocol is going to be really based on MOUs, daily active users, weekly active users, monthly like active users. Like you might go, hey, we got this cool social profile platform, we've got this cool tool. Then like any kind of investor, they're going to want to see, depending at the stage, how many users do you actually have using this protocol? Like how many monthly active users do you have? And, you know, I'm looking to see distribution. Like, what is your strategy for distribution for this? Like how if you're building Twitter, like how are you going to compete? Like what is your unfair advantages? But then also like how many users are using and adopting this, right? It could be user growth, or it could be just number of users that you have, because that's going to paint a pretty good picture in terms of like the adoption of that tool. Because just doing a launch doesn't mean that you're doing a launch on a Launchpad isn't going to mean that your product is suddenly going to acquire a whole bunch of users, right? It might help with that, but it will more fuel on the fire than actually bootstrap your entire user base. So you want to make sure that you've got an active user base of users before you're getting into that token launch anyway.
Yeah.
And wait, when neither TVL nor daily active users mean that you have a community necessarily, right? This is the two different separate things. It's like users can really leverage to build a community, but you might have a tool over here that has users using your platform, but you want to go launch a token, but you've got zero community. Who's going to buy a token? Like who's going to hold your token? Who's going to participate? So they're very different things, and it's understanding how to bridge one into the other, or how to leverage. Like if it's a protocol and it's got a lot of traction, TVL, users, all this sort of stuff, that might be strong enough to use to tell the story to build a community, right? Or same thing with a social fi platform. It might be like you got, or not a social fi, maybe it's a platform that's got users that aren't part of your community. They might be like, okay, I can leverage this story to actually help build the community and get people excited about this, which is potentially slightly different.
Yeah, right. I have a very, I have an interesting question to ask. So
sure, go ahead.
I think for many projects, or maybe some of the founders here, they're at very early stage, right? So there is a road ahead of them. How would you advise, or in your opinion, what is the best way to develop a project and go through the token launch, this path, in terms of building a team and the technology wise and fundraising, how to use your small budget effectively? Like what would you advise them to do?
I think it depends on your type of product and type of project. Like similarly, crypto struggles with this a little bit because in Web 2, you're wanting to get an MVP or prototype as quickly as possible. You want to test it. You want to see if it's going to kind of get viral growth or product market fit. In crypto, that might be a little bit harder because you might run into the situation where you've got to pay for audits. The development to getting a product out might be very challenging, but you can still create prototypes. Sorry. So you can still create a prototype. Maybe it's a Figma design or wireframe. Test that with users. Go to chains, get grants. That's a really good way to do stuff. Is to if you're not building a chain, if you're building on a chain, is really trying to tap into the audience and the community of that chain and get support and backing from that chain. So it might be like build your vision, build your white paper and the idea of what you want to build. Don't solidify it, build a prototype, test it with users, figure out if it's something that people want. Do interviews like you would kind of normally building a product. Get it to a stage where you can maybe get a grant from a chain, because that grant is going to help anchor you potentially with investors. So, you might, if you can, it's not easy to do either, but if you can find the right ecosystem that matches kind of what you're looking to build, you've got quite a solid differentiator behind it. Like you really want to dig into the problems that you're solving and trying to figure out is this a problem that's actually needs to be solved, or is this something that's going to it's got a strong enough business model to actually grow and scale. And then from that, like test this with audience. And this is how I would do it is test it as much as possible with the audience, figure out what is something that people want. Sometimes this is challenging too, because it might be so far ahead of its time that you don't know how to classify it or to kind of get this kind of feedback that you need. But for the most part, you should be able to kind of build that way. Grants is a good way to get funding in the early stages to kind of deploy the early stages of your product. Some products is difficult because you need to build a lot before you can even launch it. Some products you can launch components of your protocol and start to get users at the early stages. But the lowest hanging fruit are the users that are already using a specific chain. So if it's a chain that hasn't launched, or if it's a chain that has, maybe they've got a points farming program, or they've got some campaign running, this can give you a lot of leverage to acquire a lot of users very quickly, because you can tap into those points farming campaigns pretty easily. We did this with Say, even though I'm not a very big fan of that chain and we moved away from them. That leverage gave us a lot of traction, just being at the right place in the right time on the right chain. with a pre-launch testnet program that was running, helped us to bootstrap a lot of kind of heightened users. Even though a lot of them were mercenaries, that gave us kind of the boost that we needed. And that can also help to validate your product, because if you can check if those users are sticky, you can really see the behavior of the users. Some of those users might stay behind and become part of your vision. So you can really, I would say, leverage the chains, leverage the communities that already exist there, because that's going to give you like a very strong kind of base to build off. Anchors through grants are going to be like a great starting point. Then if you can line up with any points farming programs or anything like that, that's also going to give you a boost. The next phase I look in is incubators and accelerators. If you fall into that category where you've got kind of enough of some of these things where someone might look at it, like outlier ventures, sometimes those things with chains, long hash X, there's what is it? There's a whole range of these accelerators that are pretty good on that front. So, tap into those, do co-marketing with other projects in the ecosystem, build up that traction. So that's what I would be doing at the early stages when you're kind of running off very low budget. Even if you don't have a team, like you can be taking these actions day in, day out to kind of building up your profile and trying to get kind of that exposure in the early stages. If you've got a really bullish product and you think you can kind of really, you've got the background, the experience, everything, you might be able to raise a friends and families round or a pre-seed round, which will give you some capital and kind of get you to that next phase. Angel rounds as well. Angels are much easier to get in than regular VCs or capital. So typically you might get them in after a phone call if they're bullish. Tap into your chain or your ecosystem, or your own network if you've got past experience to really tap into these angels is going to help. If you've got credibility already from past projects, the founder angels is going to be easier. If there's a chain and they're willing to kind of introduce you to angels, or there's other founders, you might be able to raise angel round from like people within that ecosystem. It's going to be helpful. And then you're really like looking to kind of, either like it's something you need a lot of capital to build, but it's really bullish. So you'll be able to go into a seed round and raise that, and someone's willing to back you over the long term because they know that it's going to be something, the vision's great, the problem you're solving is great, you validated it, it's great. Or it might be something you're going to need to launch and build up traction as you go, which might be seed rounds, it might be an accelerator incubator. It might be just really focusing as much as possible on your traction building to get to the point where you can then raise a seed, raise a private or strategic round, and then go into launch. So there's different avenues. If you can go down the route where you're building infra, you're building something that's kind of big, bullish, you can get these tier 1 backers, you're going to skip over some of these traction pieces for sure, because they might back you at a much earlier level. And then when you go to kind of a launch pad, you've kind of got all this weight behind you. The other route is get as grind as you can, focus really on building community traction, leverage as much as you can around you. What levers can you pull that are going to help lead to rapid traction? Because 1 + 1 is very slow, but if you can go, times 10 and leverage the tools around you and the narratives or everything, it's going to help you accelerate. So I don't know if I kind of went on a long ramble, and I don't know if I answered your question fully directly, but that's how I look at the early stages and building up. It's like, when you've got that product market fit, you kind of know like your product and the users and they love it, it's just going to kind of snowball a bit. So it's going to be much easier to gain that traction than if you're building maybe the wrong thing and it's really slow and grindy to get things going.
Right. Yeah, actually you answered the question perfectly. And what is the time frame, would you say, for a project from start, right, from the beginning till they're ready to go to Launchpad?
That's a really hard question. It really depends on what you're building. It just really depends on what you're building. Like, I mean, we're launching a project in May, June that's been building for 3 years, right? And that can be depending on their timing, the market timing as well. Depends on what kind of project you're building, how quick you can kind of generate. Like we've seen these projects that build like Telegram bots, right? And they can grow a community very, very quickly. They can launch the code pretty quickly. They can bootstrap it, and then they've gone to a Launchpad fairly quickly, right? From their launch. Like it's not a huge turnaround. But then the question is, do they have a roadmap past what they're already doing? And is it just going to be a Telegram bot that's not really going to do much, and the token's going to launch and then die off, which is what we've seen happen a lot of times. But you might be able to launch your token at earlier stages and then build alongside the community in that instance. If it's a big infra project, it may be years before you're ready to do your TGE, like if it's a chain or one of those things. But maybe an average of 1 year or 6 months, just really depending on your product, how fast you build traction, the funding that you have. There's a wide range of factors. It's very hard to give a straight answer to that.
Yeah. Okay. Thank you. No, the reason why I asked this question, because I talked to some project in past or some project had a call with us, want to work with us for marketing services, usually they're looking at like within 6 months, and then to have a huge community, go for token launch. Sometimes I find it's a little bit too much a stretch. You mentioned that you prepared for 3 years, right, for your projects.
Yeah, it just depends. Like, it's not that we prepared for 3 years. It's that some projects just built for 3 years, depending on the build that they've got. Projects always overestimate their token launch. We always get this a lot. We're talking of 6 projects. They're like, we're gonna do our token launch in March, and then it's not even launched in June. Do you know what I mean? Because it's just like there's always this oversight of the amount of stuff that has to go into a token launch is actually a huge underestimation by a lot of people. You need to line up exchanges, market makers, legals. If you're fundraising, there's just so many moving parts. There's so much you actually have to get off the checklist. Like, you need to get on CoinMarketCap, CoinGecko. There's a lot that operationally that needs to fall in line. Depends how you launch your token. If you just do an airdrop to stealth airdrop to your community, it's a different story. But if you want to do a big launch and get on a big centralized exchange, there's so many things that actually have to line up for that to happen. And I'm not saying this to scare you guys. It's just being prepared for that and understanding that it's kind of like a startup. Like, there's always 100 things to do and you're never getting through the list. And that's kind of what it feels like a little bit. But you do need time to prepare. There is kind of a journey to doing it. I'm not saying you can't do it in 6 months. If you've got good resource behind you, you've got a great team behind you, you're efficient, you can do it quicker than you expect. But I think it's always going to take a little bit longer than you imagine. And it depends on your product. If you're building in a very specific niche and you're like, let's say you're an AI expert and you've built for a couple of months, you've been able to build the toolings that you want, the narrative is right, you're going to be you might be in a better position to launch quicker because the market's going to carry you a little bit more, right? Like, if you're building something that's maybe more niche or more something that isn't the market's not ready for, it's going to be a lot more of a stretch and more of a push. But if you're kind of aligned with what the market already wants and the market's excited about, it's going to be a bit of an easier carry in terms of launching sooner as opposed to something else. Love it or hate it, the market is kind of very narratives driven. I'm not saying you should narrative hop, but if you're within specific categories and you're kind of ready and you're in a good position, that will help you, obviously.
Yeah, you mentioned about market timing. How important is it for token launch?
Very, but you can't always time it. So market timing, pretty much a lot of the crypto market is correlated, right? So it's not necessarily to Bitcoin, but in cycles of liquidity and flows. So if you look at most charts on CoinMarketCap or most charts at the moment, most of them are in a big drawdown of 50% or 60% or whatever it is. So there's huge correlation that happens with tokens and liquidity cycles. And, there's obviously your project makes a big difference, but actually more importantly than the project is the market has most of that impact or most of that decision-making power. Now, you can't control when you launch your token. Like, if you've got enough timing, you can try and front run it and go, okay, the cycle is looking like this. Everybody's excited. We've still got 2 months. We're going to launch it in a month or 2 months and we're going to be ready for it. But you don't know that you're going to set your local token launch date, and you don't know that 3 days before the market's going to crash. With bonus block, it was something we had to deal with where 2 days before Bitcoin crashed and everything tanked pretty hard. We still had to launch the token into it. It didn't do as well as it could have. It still did, I think, 7x or something at launch, but we couldn't have controlled that. We couldn't have predicted fully that. And it just happened, and we had to just do the best that we could in that situation. And it's the same with your launch. There's narratives, there's market cycles, there's things you could tell a little bit further out. Like, if the market's dead across the board, you might go, launching our token in 2 weeks, a month, maybe not the best decision, unless you know that you've got enough hype that you can cut through it. So yeah, you can't always predict or control it, but you can to some extent.
All right. So actually, when the general trend is going up, or when there's something's going on in the market, even though you cannot time it specifically, something might happen, but it would have a higher chance to have a better results than basically how do you say, low market time, right?
So it's not just Bitcoin going up, for example, because Bitcoin can go up and the rest of the market can still be kind of drained out. But it's usually like you get a pretty good idea around the rest of the market and the performance of the altcoins and the liquidity and what people are doing across the market. Like, the retail hasn't really entered the market in this cycle. We're still kind of playing this PvP game. So, if you guys are all building now, right, and you just focus on building the right products, I don't know the timing of if, when, and how, new retail is going to come into the market, but you will feel the impact of that. Like in the last cycle, you kind of get the pre-bull and then you get like kind of a lull. And then, when that kicks into gear and you get kind of everybody starts like the old crypto people go, oh, I've got all this Bitcoin in my wallet. And, then you start getting people that got excited and they come into the market. You really see large floods of liquidity flow back into the market. And that will carry all the boats. But yeah, I mean, you can't fully time it, but you can to some extent know that like you can make some predictions around you're in a deep bear market and you haven't got a lot of hype or communal stuff around you. You're not really in the narrative. Maybe it's not the best time to launch your token. Maybe you're better off waiting until either what you're building's in the narrative or the market's doing better overall. Projects are launching. There's liquidity, there's excitement, there's things going on.
Yeah, right. Okay. We have a few minutes left. I don't know if any of you guys have any questions to Simon or general comments. Feel free to, speak up or type in the chat. Okay, Josiah, okay, go ahead.
Thank you, Simon. My question is, we're building a project, and our approach so far is to build community first, because it's going to be a token-powered project. Our approach is to build the community first, educate the community with what we're trying to build, and launch the token before building out the full scale of project. Although we've done the full background work of what we need to do, how we need to build it, and then what are the risks, considering all the factors. So I'm wondering if this is the right approach or a good approach.
It depends on what you're building and depends on your funding requirements, right? So there's a few ways you could probably approach this. If you're able to bootstrap a pretty strong community, you might be able to do like a stealth launch where you launch the token as an airdrop or as a program that helps you to kind of build community, and you can distribute it that way. And then you build the community with the token, and then you build up the community, you co-build the community as the token price is live. You probably don't have as many risks of valuation because it's probably going to be a much lower valuation and build with the community. But they're going to want to you're going to have to be very transparent with the way that you build that community and the way you're building, because they're probably going to, if they're buying into your token or they're holding your token, they're going to want to know roadmap updates. They're going to see this kind of build as it happens, right? That's one way to do it. Just depends then on the funding requirements. There's ways, obviously, you can sell tokens into the market as a way of doing it, but it's much more challenging because your liquidity is likely going to be lower. You're not going to benefit from the launch hype, but maybe you can build the community enough to kind of build that kind of up. That's one way. And then you've got issues around seeding the pool because you're likely going to be low liquidity. Depending on the type of project that you're building, I don't often recommend launching a token before you've started building a product. The main reason for that is that you're going to run into a situation where your token holders are going to hold your token, and they're going to, buy into the vision, and the vision is going to help them hold the token. But that only happens to a point. If you try and go to Launchpads and you try to do this sort of stuff and you're not releasing new products, or you're not able to do it, unless your product is extremely grand, maybe it's an infra solution or something kind of like much bigger scale build, you end up in a situation where it's going to be hard to launch without a product to show people and have them play with. But also you're going to run into post-launch token issues where you realize how freaking hard it can be dealing with the community and a live token, especially when they've bought that token. And then you've got the stress of building at the same time as trying to keep your token price up, which is quite challenging. So, I mean, I think it really depends on what you're building, but just understand that like having a live token in the market and a community and everything is a lot of work. It's a full focus on itself. So you got to kind of weigh up where you're at and how you want to do this.
Yeah, I understand. Actually, what we're trying to do in relation to that is not have the token in the markets, but more like to let the community know there is a token coming, and to prepare them towards that.
That's fine. That's fine. You could do a points program. There's different ways that you can kind of engage and activate communities in advance to help build it up. But keep in mind, one thing I want to really say on this, when you're building a community, incentive only driven communities sometimes aren't always the best thing, because if your community is just built off an airdrop, you're going to end up with the wrong behaviors and users. So you want to build your community off excitement, identity, culture, some level of incentives, because you know they'll stick around for the long term. But then there's other things like recognition, ego, belonging. You really want to like anchors within your community to build your community around. If you just create a points program and go on Zealy, you're going to end up with a ton of maybe third world, maybe not people that are just farming your airdrop, or they're like just around because they're waiting on that airdrop, and it's going to cause you pain because once that airdrop happens, those guys are going to fall off. We've been here before. It can work in small elements as a bootstrapping. Again, it's same thing with Launchpads in a sense. Like if you want to get that kickstart that you need, you can sometimes leverage that to get the kickstart, but understand that is fake data necessarily. Like if you could bring in 50,000 people into your community that are driven by an airdrop, that is fake data. It might give you some leverage with a Launchpad, with a VC, with a SEX, but that isn't necessarily real community. And you suffer the price when you realize that that's over. You end up with nothing left, and you've actually got the penalty of having a 50,000 person community, but then you don't have the engagement. People are like, what, did you just buy bots? Like, or you're getting penalized on Twitter because you haven't got the engagement.
Yeah.
So you got to get really good at like building people that belong. And I'd rather have, as I said, a couple hundred really strong community members than, you know, the thousands. Like the VCs and stuff, they want to see these big numbers. But if you can build like a community very strong to 900 and then leverage some kickstart things to build up the numbers, then at least you know you've got that solid base as the framework for growth.
Yeah, thank you very much.
We have a couple of minutes left. Is there anybody else there, you know, having a question? Please feel free to raise your hand or type it here. Meanwhile, would you be open to leave your contact information here in case some of the companies or entrepreneurs they want to contact you?
Yeah, for sure. Feel free to reach me on Telegram. Let's see if I've got the right one. Telegram. It might get a little bit clogged in the inbox, but yeah, I mean, yeah, that's probably the best way to reach me. I'm usually pretty active. So yeah, I mean, good luck, guys. I'm excited for your journeys. I think that's the one thing that excites me the most is builders building things they believe in and setting off into that journey. Maybe it's their first or second or third or fourth or fifth thing they've built, but there's always like a lot of things to navigate, and our plans, I think in the future, we haven't gotten there because we've got so much backlog to catch up on. We want to really create a lot of founder specific, I guess, like content, just even evergreen stuff out in the market that's either interviews with credible sources or parties in the market that help to navigate some of these go-to-market pieces. Like how do you pick a market maker? Like what things you look for, centralized exchanges, how to navigate these things. Because I think these are really important and really challenging things to navigate. Like no matter your experience, there's just so much you got to know about and that can go wrong. So yeah, that's something I really look forward to in the future that's not ready yet, but I'm excited for you guys. I'm excited for what you're building and look forward to hearing from you guys. And yeah.
Okay, thank you so much, Simon, for your precious time and sharing your experiences with us. And I hope hopefully some of the entrepreneurs here, they can get valuable input, and then probably some of them might contact you. And thank you guys so much for attending this Crypto Valley Association Startup Working Group events, and we will have more online events or offline events coming for the rest of the year. So stay in touch. Bye-bye.
And thanks for hosting, Yasi. Thank you so much.
Yeah, welcome. Bye.